Welcome back. While we were speaking with Dr. Banerjee, the markets have taken a turn for the worse, much worse actually. Anuj was pointing out that yesterday's low was 836570 thereabouts. We have plunged below that. We came back nicely in the morning from that level and it looked like that low would be protected, but no such luck. In the last half an hour, the bears have taken charge more emphatically, and that could be because there is a huge basket selling definitely in financials. It will not be for nothing that your worst loser in the Nifty is Kotak Mahindra Bank, and the worst loser in the banking stocks, and I'm not referring to Nifty Bank, just in banks, the biggest loser is Kotak Mahindra Bank, down 10% at this point in time, and the next bank that's lost is Bandhan Bank. So it's not as if the weakest are punished, it's just being a basket selling, indiscriminate selling, wherever perhaps you can find some buyer. If Anuj is reconnected, Anuj, this is looking more brutal than it looked in the first hour.
Oh yes, Lata, you know what, I thought the low would be protected, but once you broke that, I think the problem is the bank Nifty, Lata, like you also spoke about Kotak Mahindra Bank. I mean, who's selling Kotak Mahindra Bank down 10%? It's obviously not the trader sitting in Mumbai, it's the FII sitting in US, UK, Hong Kong, wherever he or she is, and that's lock, stock and barrel sell call which has been taken on some of the names where there's, in the first hour it looked like at least the mid caps were outperforming. Perhaps the reason was that there's not enough liquidity in the mid caps. The liquidity is only in the large caps, large enough to sell into, and that is why perhaps that was a bit misleading to just look at the mid caps and say the market was a bit resilient. This is turning out to be ugly. I never thought, you'll have this kind of expiry day. Sure enough, the signs came yesterday in last hour when the market started to capitulate from the highest level on the bank Nifty. But hand on heart, 1,000 points on the bank Nifty, nearly, and 300 points on the Nifty. I don't think we bargained for that. Reliance also down about 4.5%. I think we have Ashwani with us. Is Ashwani connected with us? Ashwani, your sense till morning, your call was that you want to buy the dips and this will reverse at some point. But has the price action now negated that?
See, basically, if the financials are going down 1,000 points, there is no way you can protect the Nifty. 8350 was yesterday's low, and below that, the market has fallen in a very waterfall sort of manner. I think this is forced basket selling, that somebody wants out and he wants out now at any price. This has nothing to do with our fundamentals, but what it does open up is a revisit back towards 7,500. For a few days we consolidated and at lower levels found buying, but this is now breaking down with great amounts of force. So I would think that the bullish call is now not valid, and possibly we should end up at the lows of the day. That seems to be the valid call, particularly because we are going into a holiday, and the US, even yesterday out there you were positive at one point at 200, 250 points higher. That fell 400 points by the close. So that way, something has started afresh, and it is being led by financials and high quality financials. So it will be difficult for the Nifty to engineer any sort of pullback.
Okay, well, very sharp cuts across the board, but also remember that some of the lead indicators like the auto sales are very weak for now. Maruti has come out with their numbers. There's a 47% cut in overall sales, so that has added to the incremental pressure there. But Ashwani, on individual stocks, what does one do? Any fresh short positions that you would advise on any names? What are you looking at now?
See, basically financials is the weakest space. We had, Bajaj Finance going into the green. Again, it's fallen back. Maruti, etc. Now people know what kind of damage you are sitting on. So all kinds of financials, plus I would think even FMCG and the defensives which were holding on where people were hiding. Even they could get into trouble. But financials is the one place where it seems there is consistent selling, particularly on these over-owned type financials like Kotak, HDFC Bank, etc., where there is still some meat to take off.
Okay. Ashwani, do stay on. Nimesh Shah has been working the phones with various dealing rooms, and he's getting us the dealing room chatter. Nimesh, good morning. What are you picking up? Is this some kind of a basket ETF selling, foreign selling?
Hi, Lata. So few things. First and foremost, I think the fall today is largely led by financials. And within that, it's Kotak Bank, which is dragging the bank nifty down. The reason for Kotak to fall 10% is that the MSCI has deferred the rejig in the MSCI EM basket, and because of which, the reason was Kotak was expected to increase the weight. MSCI was expected to increase the weight in Kotak Bank starting April 1st. Now that is deferred to end of May. So, that's the reason why you're seeing a sharp fall in Kotak Bank in today's trade. So that's the reason why the bank nifty is down. But largely, Lata, what was holding the market for the last 2 days was the year-end, calendar year-end. And there was a bit of NAV propping as well, which was managed by the mutual funds. Now that that is over, we are starting the new calendar year. There is no big trigger for larger funds to buy into this market, number one. Number two, today there are reports suggesting that one of the largest, sovereign fund, which is Norges Bank, is looking to liquidate a lot of its long positions across the globe, including India. They manage a $6.5 billion fund into India, and probably you'll see some of the large names under pressure because of the fact that they want to liquidate some of the larger holdings. So that's putting pressure on some of the large names, including Reliance, because that's one of the top holdings for Norges Bank. So that is the other reason why the markets are down. Third, for the last few days now, I'm constantly getting feedback from larger CIOs that they fear now that there will be redemption pressures into their fund as well. So starting today, because of the new calendar year, two things will happen. One, the domestic flows are going to slow down. Two, the FI selling will just intensify. And three, the volumes are going to just drip down with every passing day. I've been saying this for the last few days that post the expiry, you will see the cash volume going down. So the impact cost will be much, much higher. And that's clearly playing out in today's trade. You don't see Kotak Bank falling 10% on very large volumes. So that's also the reason why the markets have sharply fallen, led by financials. So that's the initial feedback that I've picked up from a lot of people. I've been working the phones around and talking to large investors as well. I'll give some more feedback, but the initial feedback is volumes are low, and the fall is largely driven by financials, and that's where the money is going to go out gradually, because that's still an overweight sector for a lot of the mutual funds.
Oh, yes, Nimesh, that point is well taken. I think Nimesh explained 2 or 3 points very nicely, especially on Kotak Mahindra Bank. And you know what, just look at some of the names now. For example, look at IndusInd Bank right now. And you know what, this is a market which is now beginning to punish overvaluation. So whether it was Bajaj Finance, the only savior so far has been Lever, but my sense is even that perhaps will now start to see a decline. So you're now seeing a big decline. This really is brutal. And on an expiry day, things get magnified on expiry day. And just to put things once again in perspective about the volume part, we have done 11,000 crores of cash market volume. Now, that's not very small, but for expiry day, that's not very huge as well. The impact cost right now is so high. I mean, if you're taking a look at, for example, a bid and ask spread in a lot of names, even in large cap names, that bid and ask spread would normally be about 1 to 2 rupee maximum. You're now seeing 5-10 rupees open up in some of the names. So it's telling you the kind of low volume selling that we are seeing. The good part is that when it reverses also very quickly and very sharply. But as of now, the market is facing the brunt of this sentiment selling. Sanjay Dutt is also joining us. Sanjay, good morning. I remember you were having this conversation. You said that you, with regret, had to abandon your bullish view and take a bearish view after what happened. But you tell us, are now things getting overdone on the way down as well, or is this par for course really?
I think not as yet, because we don't find any reason to be optimistic. In fact, the news coming from negative of the COVID-19 impact doesn't seem to be huge. But the fact is, we are part of the markets and if what we will know from
Sanjay, we're not getting you very clearly. We're getting you in bits and starts. We'll do one thing. We'll redial your number. It wasn't all that clear what you were saying, and we want to hear what you are saying. At the moment, the Nifty Bank has done worse. It's gone into a 5% cut. So rather serious. Kotak Mahindra down 10.3, followed by IndusInd Bank, which was actually in the green, now down 5.3%. So it's a huge swing in IndusInd Bank. Let's do one thing. Prashant has joined us now, and he has also been working the phones and got an interpretation from the dealing rooms on what this sudden fall is all about in the market. Prashant, over to you.
Lata, hi, good morning. I mean, the easiest thing would be to refer back to what, I presented as an analysis 2 days back, which was comparisons for, where we are in this particular correction back to 2008. We can defer to that, and we can, and it would play out. It would explain why the market would continue to sell off after last week's 16% fall. But that's not why I am here. I have, this is something which is very much at play, and I've heard this from different people in the market. So this is the correction, right? The title, as I've put it, is the MSCI disappointment. I'll explain why this is a disappointment, and for that, we'll have to go and look at the background on what the hope was. So let me start right at the beginning. So this was essentially the rule which is effective today, April 1st, 2020. As part of the FY20 budget, what the government had essentially done is that FPI limits in companies across the board, starting the 1st of April 2020, would go up to their sectoral limits. So let me give you an example. If in a particular company, the FPI limit has been capped at, say, 40% or 45%, and the sectoral limit is at 74%. Starting the 1st of April 2020, automatically, without any permission, the FPI limit in that particular company would go up to the 74% sectoral limit. So it would default to the sectoral limit from the 1st of April from today. So, I mean, this is basically the rule, the background of what I want to explain here. Let's just go forward. So the change was effective, as I said, from the 1st of April. What is the government rule so far? I mean, essentially, as of till yesterday, FII limit by default was 24% in Indian companies, and companies to increase or go up from 24% had to take a board approval. I mean, that is essentially what we used to see. Companies wanting to go up to 49, 74, etc., depending on what the board seems appropriate. Now, what was the hope? Right? Let's just go to the next one. What was the hope with regards to MSCI? The hope was this, that sectoral FPI, because sectoral FPI limits on a, let's just go to the next graphic because I think it's important. Yeah, this is the hope. Because sectoral FPI limits are often higher than company-specific FPI limits, the hope was that this is essentially going to be beneficial. FPI limits across the board with exceptions. I'm just giving you the top-down broad interpretation, but broadly, company-specific limits would all default to much higher sectoral limits. And as a result of that, roughly, India was expected to see some $15 to $16 billion in terms of FPI floors. Right? Now, this was supposed to happen when MSCI announced their May review. Now, remember this part. And it would have been effective from the 29th of April. I mean, as typically it is with a 15-16-day lag. So this was the hope, broad hope. What has the MSCI said now? This is essentially the statement from MSCI. They've essentially said that they will wait before making any changes to the MSCI indices. They need to see practical implementation of the changes, and they need to see systematic publication of new sectoral limits applicable to Indian companies. And as of now, they will continue to maintain the current foreign ownership limits for Indian companies and will defer any changes. The timeline was this: 1st of April 2020, these changes will take effect. Markets were hoping that MSCI would provide a guidance before the 1st of April in terms of what they intend to do, and then actually do it in May. what MSCI has done today, the day when these changes take effect, is essentially saying that we will wait, which means that in all likelihood, these changes will not take effect on the in the May review, but they may be pushed out into the September review. I mean, that is essentially the timeline that we are looking at right now. Why is this important specifically? Let's just put the Kotak Mahindra Bank stock here. I mean, that's the reason why I asked the producers to include this. Here specifically, I mean, we'll have to, by the way, for banks, it was not very clear. Will banks' ownership limits default to that 74% sectoral limit, or a prior RBI permission would need to be sought? But I've heard it over the last many weeks now that, well, you know, companies like Kotak, where I think the limit is 49 and the sectoral limit is 74, you know, would benefit immensely. People were projecting $1.5 billion to $2 billion worth of inflow into a name like Kotak Mahindra Bank. All of this is not happening. I think that is one additional reason, not the sole reason why the market is selling off, Lata, but one additional reason.
No, actually, Nimesh explained this to us just 5 minutes back when you were getting ready, Prashant, but your background is most helpful, that the April 1 deadline kicking in and the May expectation not getting realized, at least as for now. Sanjay Dutt is back with us. Sanjay, I hope we have you on a clearer line. Anuj was asking you that your expectation that we have fallen enough and it's time to buy is not quite materializing. Do you think we will see more falls?
Lata, as it stands right now, what Nimish was correctly talking about, and what's very evident is that we are a part of a global cycle. If, you know, anyone's got a problem, you know, somewhere outside the country, even if we don't have much of damage from COVID-19, but if some fund or some other asset allocators abroad are having an issue and they need to, you know, underweight on equities or need to underweight on EMs versus DMs or whatever, we are going to be part of the collateral damage. One can clearly make out from the movement in the stocks like Kotak Mahindra Bank, etc. Nothing has changed from yesterday or 2 days back to today. But the fact is that, you know, you've got a demand-supply issue and you've got excess supply coming from somewhere, and no one's willing to come and take bets right now. You know, markets really lack depth at this point of time. Liquidity is very low. And of course, you know, the biggest cloud that we had, which we heard from the analyst from Nomura was talking about, is that one doesn't know about the earnings. So historically, we may be trading at the lowest levels on a trading earnings basis. But if you can't really estimate what's going to be the damage on the earnings, whether the lockdown is going to end on April 14th, it may be extended, uncertainties are too high. And given this backdrop, in these kind of situations, equities generally tend to drift down. And, you know, there is a period where you reach the extreme levels. And it's only then that one sees a bottom in place. And that, like I've always been saying, bottom is always a function of price and time.